All right, good evening, everybody. As always, I like to keep this to an hour so all of you can plan your evenings and not feel like you're missing something. So I will finish up in an hour. I typically, will hang around if somebody wants to ask, some additional things, mostly kind of non-technical, so those of you who want to leave can leave. Boy, today, I usually ask you guys, but I've asked enough, I think I know. I typically ask if you guys are mostly longer term traders, day traders, or both, and it's always in pretty much a third. A third of you pretty much are mostly day, a third of you mostly long term, and a third of you a good combination of both. But boy, I can't buy a good day this week. Yesterday I made my daily goal, but I was triple the goal and gave some back. Wasn't mad about it. They were good trades. Today I was up triple. We had this rush this afternoon, this big surge, which initially helped me because I had a long that got me to a target, made a very nice morning. And then as we rallied, I went after some good shorts. And as long as we would have done anything but put in a record big day, I would have done fine. And we put in a record big day, so I gave back everything today. So I'm a little crabby about that, but other than that, that's what happens. I don't like days like that. That's not my specialty. I like the day-to-day slop that occurs on 80% of the day, something we're going to talk about today. So let's get going with today's little presentation. It's called The Language of Charts, a trading style of listening to charts by me. That's me, Paul Lang. A free event for members. I've been doing these about once a month, not necessarily a firm schedule, but about once a month they come up. There's the fancy Language of Charts sign. Couple things, as always, I like to remind you, I know a lot of you are interested in the free events that I do, like this one and the other things. The next free event coming up is going to be, that's not right, it's supposed to say December. There may be I tell you, I had so much information I want to put in this, and I got a little behind. This is December 7th, that is next month, like in a couple weeks, December 7th. On Friday, it's going to be that Introduction to Mastering Technical Analysis class. This is a class that you are all invited to, all members are, all of you. It is a Friday, it's a real class that I teach. It is actually the first part of the Saturday seminar, and that also kicks off the next seminar cycle. A lot of people ask sometimes what I mean by the seminar cycle. There's 3 classes that are part of my seminar program I teach, and I repeat them about every 6 to 8 weeks. So every time we repeat them, I call it a new seminar cycle, because there's also other things that I do for the seminar students in there, the practical application review day and the scanning night, which, by the way, for those of you that are members, that's tomorrow night and Friday night. So that's the next free thing coming up. And then also tomorrow, I'm going to just get together for a question and answer. I want to make it very clear tomorrow. You get an invite. Tomorrow, Thursday, is not an educational event. Attend only if you need additional information about the services that I do here, the trading room, the letters, or the seminar program. Okay, so don't show up if you're not interested in that. I don't expect a lot of people to that. It's just a good time for a little question and answer. I'm not going to have much to say. I'll have a couple of slides to run through real quick what they are, and then those of you that have questions, I know some of you email me, and I don't always give great answers by email, so it's a chance for you to do that if you want to. It's tomorrow night. So again, not an educational event. Don't show up unless you really want to be there. What is the language of charts? That is a term that, as far as I know, I just started calling the way I look at things the language of charts. I hope I didn't steal that from anyone. I don't think I did. Here's my definition of it, which I've never written down before this event. Understanding the language of charts is being able to see a collaboration of events across the relevant time frames, typically 2 time frames above, 1 time frame below, and to be able to constantly understand the bull-bear battle, who is currently winning, and what the odds are of that changing. Paul, that's me. Another way to look at it is, what is the language of charts? It's being able to look at the charts and understand what is going on in all situations. One way to explain it is to say it's the opposite of memorizing cookie-cutter patterns. They're easy to learn but rarely work. You may think they work if someone shows you the examples that work but leaves out the ones that don't. What do I mean by cookie-cutter patterns? Can anybody name cookie-cutter patterns for me? I need some water. Can anybody name cookie-cutter patterns? What I mean by that, dude? I'm not even sure you guys understand what I mean by that. Head and shoulders, cup and handle, Yeah, rising, falling, wedges, right, all flags, pennants, reverse flags, reverse head and shoulders, all that good stuff. Yeah, even M tops and W bottoms. I mean, those are so. I mean, yeah, yes, but those two also, right? Gingerbread men, yeah, Christmas tree, reverse Christmas tree light patterns, yeah, all that, all that stuff. And I have a real problem with those, as you know, because I've mentioned this topic before. And even going back to prior places, some of the the coined terms, gap and snaps and bullish gap surprises and these type of things. They're all meant to be catchy little terms that are supposed to instill a picture in your head of what to look for, and then have a pattern that works. And while I like the idea of looking for pictures, it takes more than that little snapshot of a picture to find a pattern that works. And the reason I dislike these so much is because they can be deadly to new traders, I think, in a way. Cookie cutter patterns, here's just some samples of, all of my, I clipped these out of some technical website somewhere describing what they are. I know what they are, but there are all these different patterns that you can look at, but they're very one-dimensional. They simply just don't do the job of what it is you need to have done. In other words, there are so many more important things going on. And when somebody shows you these, sometimes they'll show you, oh, look at how this works. It works. It works. It works. It works. But that's not how you test something works. I mean, you take 100 instances of it setting up and then see how many actually work. Work in terms of whatever you define working, getting yourself to a reasonable target before stopping out or whatever. And it's not that these are wrong. Don't understand me. I'm not saying that like a pattern like this doesn't have a very bullish look to it. What I'm saying is it's terribly, terribly incomplete. Because, for example, if this was a 5-minute chart right here, does it matter to you if bigger time frames are indicating that there's huge selling going on? In other words, what if these are idiots that are lining up to buy this stock, and the big money is still focused on selling? And when you pop above here, you're going to get what I call, anybody know what I call that, when you have like a downtrending base and you try and pop above it and you get slammed? Anybody know what I call that? Yeah, whack-a-mole. Whack-a-moles, exactly. I like that little kid's game because it's the most common thing you see happen a lot. So everything has to be in perspective. If you want to talk about a head and shoulders pattern, well, okay, but put it in perspective to me for the big charts. Let me ask you some questions. This is what I call a one-dimensional pattern because it only shows you this one thing going on, right? But where is the big money always coming in? Does big money, if a big fund needs to buy 800,000 shares of some stock that trades 1 million shares a day, are they coming in and buying it in 5 minutes or 10 minutes? Or if multiple institutions are buying semiconductors, does it come in and get bought up in an hour, in 2 hours? No, these are the type of things that make a chart. They form the chart. We are here to follow charts. We don't make them. The reason charts all of a sudden deviate sometime, you may think you're going along and there's this trend or there's this downtrend, it's because big money steps up to do something. They don't do it because of the chart. They make the chart. They are the chart. Somebody calls up an institution and says, I run this pension fund, whatever, and we want to get more in stocks. I want to buy $100 million worth of semiconductor stocks. Okay, they go out and buy them. They don't buy them because they're on the 200 period moving average or because of this line or Fibonacci line or this or anything else. They buy them because they have an order to buy them. That's where it starts. That's where the money begins. That's what makes the chart. We're here to follow that. And by looking at just a one-dimensional, one-concept pattern like that, you're ignoring all of that other stuff that's out there, right? Does that make sense, everybody? Does that make sense? I want to make it clear. I'm not saying that those patterns don't have some validity, but in and of themselves, all by themselves, they are so incomplete that you will find yourself on the losing end a whole bunch more than you're on the winning end, right? Think about this, for example. What happens when you have a weekly chart and it has a breakout, whatever you want to call a breakout, right? A very bullish thing. It's a weekly chart, boom, all of a sudden after going sideways for months, it breaks out, right? But it breaks out so hard that all of a sudden 3, 4, or 5 days later, the hourly chart, the daily chart is way extended. So you have a bullish hour, you have a bullish weekly chart, but then you have this daily chart that's way extended, so much so you know you're going to get selling, right? And it starts to pull back, but then the hourly chart goes back into an uptrend. But in that hourly chart uptrend, the 5-minute chart is falling. How do you resolve all that? You pull out a head and shoulders pattern on the 5-minute chart and you think that's going to work? You look at a rising, would you rather have a rising wedge in a downtrending pattern or a declining wedge in an uptrending pattern? I mean, these names become ridiculous. And this is what I mean by the language of charts. What I mean is simply being able to look at a chart and understand what is happening in any instance. Now, I'm not saying you should try to trade any instance, because you know I'm big on saying that we want to look for the best of the best patterns. But it comes down to being able to look at a chart, because there are some times where you don't have a choice. In other words, if you're trading equities, you can look at hundreds of stocks to pick the patterns that you like. But what's an example of something where you don't have a choice? You have to look at the chart and you have to make a decision. What is that instance that that everybody has to deal with? Because it kind of supersedes everything in a way. What is the instance where we don't have a choice? We have to look at that chart and there it is, and we have to make our decisions. What chart is that? I must have asked the question very poorly. I mean the market itself, like the market. If you want to analyze the market, which most all equities traders usually want to do to some extent, right? We want to know generally, are we in a bullish market, a bearish market? Right now, are we in a bullish daily chart or a bearish daily chart? The weekly chart, is it bullish or bearish? There's only one market, right? You know what I'm saying? I know you can look at the QQQ or the SPY, but you know, 90% of the time they're identical. You can look at other stuff, but I mean, generally speaking, there's one market, right? In other words, if you want to know where the market is, you don't get a chance to say, oh, well, pass, let me see the next chart. Like if I'm looking at stock charts and I don't like the chart I'm looking at, I can say, okay, next chart. I don't like this one. Give me something else. Like I always say, about 95%, actually 97% of the stock charts I look at, I don't want to look at again. I don't care about them. They're worthless. But if you want to analyze the market, guess what? There's one market. There it is. You have to do it. And if it doesn't fall into one of your cookie cutter patterns, all of a sudden what? You're just hopeless. You don't know what to do, right? And this is, and I'm not going to talk about this. This is part of the last time, but you know, as you know, I went to a bearish daily chart bias October 2nd. So how did I know to do that? It wasn't anything to do with news. There wasn't any cookie cutter pattern going on. It's exactly what I'm talking about. What I teach is knowing to, and that was a big deal. Not only knowing to have been a bearish bias on October 2nd, but not to be aggressive trying to buy the pullback. As a matter of fact, I went swing short on October 2nd on something, and I did not even attempt any kind of long until 2 days ago. What's that, Davis? Well, the answer to the question is the market itself. I mean, if you are trading the market or if you're trading equities, you probably want to know what the market bias is, and you don't get, you know, to look at different markets. There's only one market. So what I'm saying is when the market is sloppy or it's difficult, you have to deal with it. Does everybody understand what I'm saying about that? You don't get to just say, oh, well, I'll just pass the market and look at, I mean, the market is the market. You have to deal with it, whatever it is, every day. So I'm saying that's the one time you don't have a choice or a chance. In other words, you could learn just one pattern if you wanted to and learn it really well and just look through hundreds of charts and look for the 1 or 2 times you find that one pattern. But if you want to look at the market, you don't get a chance to pass. You have to look at them all. Okay, all right, good. Yes, Gordon, yeah, absolutely. Yeah. I mean, again, this is identified in the daily market letter and in the long-term trader that morning, and then that afternoon a play went out. It was ATI short, which actually made about 4 point something risk units because it actually superseded the goal because it gapped down one day beyond the goal. Yeah. Well, Paul, actually, I don't want to. Number one, I've discussed. I don't want to I don't want to like flaunt this. And number two, it's a long discussion. And number three, I recorded it for you. You can go to the website, Paul, and it's a bookmark on the market part 3 and I'll show you where the free stuff's in just a minute. Okay. So I mean, you can go read the whole. You can go listen to the whole. It's about a 15-minute long video on all the stuff. Now, I don't want to scare you. That decision was about as advanced as it gets. I mean, I don't think you're going to take a class, quite honestly, and understand that level. But you don't need to make money. My point is to make money in the market, you need to have a really good understanding of charts, but you don't necessarily have to have it down to the level that I discuss in there. But I just want to show you what you can do or what you can't understand. So the reason that I teach and think that the description for what I do is called the language of charts is because this other stuff is just woefully incomplete. It gives you just enough information to get you in trouble. Maybe many of you can relate to that. You know, if you try things and they just don't seem to work, it could be because you're trying these very simplistic concepts. And I don't want to give you the wrong impression. I had somebody say to me one time, you know, Paul, there's a lot of value to keeping things simple. And I couldn't agree to that more. Keeping things simple is what I do, but there's a big asterisk by that. And I don't know if any of you, will get this question, but before you can make things simple, this is true, I think, of anything in life, certainly in trading. Before you make things simple, what do you have to do? Before you have the right or the ability to keep things simple, what do you have to do? Exactly, Myrnis, exactly. You have to understand it all, right? You can't keep things simple when you don't understand 90% of it. Yeah, so in a way you are, initially you have to complicate it for two reasons. Number one, you don't know how to make it simple properly unless you know all the elements that are there. Does that make sense? And number two, there's this other problem the traders have I see all the time, and it's called the grass is always greener on the other side. If you don't wrap your hands around all the concepts, whatever you're doing, whenever it doesn't work, you suddenly think, oh, here's something else I should try. I should try the double Heimlich pattern maneuver or whatever it is. Or I see things that are really idiotic, which is somebody who would say, well, I'm having a hard time in equities, I'll go trade Bitcoin or something. I'm like, that is the dumbest comment I've ever heard in my life. I mean, if you want to make a long-term investment in Bitcoin because you think it's the way of the future, that's up to you. Go buy some Bitcoin and put it away for 10 years. But you're talking about trading on an intraday or a day-to-day basis, swing trading, whatever. It doesn't matter what you're trading. Do you guys understand and agree with that? It doesn't matter what you're trading. Forex, equities, Bitcoin, it's all the same stuff. If you can't do one, you can't do the other. They all have their little nuances. I understand that. I mean, Forex is a 24-hour market. You're trading in pips, blah, 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 blah. But 99% of everything that matters to make you money is all the same. If you can't trade equities, you're not going to trade Bitcoin, right? True, everybody? I think people get that mixed up. I hear somebody say that they want to trade Bitcoin because they think it's really going to be, going up a lot in the future. Well, okay. Go buy some Bitcoin and put it under your mattress for 10 years. But don't talk to me about trading it. I mean, if you can't trade it, you can't trade it. I guess these people, they get in one day and they get out 2 hours later. And it's like, okay, I thought you were going to hold it for 10 years. Well, I'm not really sure about that idea. All right, let's examine this in a little closer detail. Some of the things, these are some highlights that I consider to be kind of part of the whole language of charts things. I guess these are things that I would say I kind of deviate from what 90% of technical analysis would teach. And again, not to say it's wrong, but I'm just being more specific and more exact. There's a lot of stuff that is taught that I think is taught by people who aren't in the trenches every day, if I want to say it that way. They're kind of very common things you hear, but they're not correct, they're not the best way, or they just don't work properly. And these are what I think some of the biggest mistakes are by people who haven't gotten a full proper education on what charts are. I'm going to talk about each one of these, so I'm just going to run through them first, but there's some slides on each one of these. Going for the home run, I'm going to discuss in pretty good detail. Thinking that swing trading is the easy place to start. Some of you right now are scratching your head going, yeah, I thought it was. Well, you didn't hear that from me because it's not. I've never said that. Waiting for confirmation, parentheses, too much, close parenthesis, and then looking for perfection. So let's take a quick look at each one of these and tell you what I'm talking about. I'm also going to give you some chart examples for most of these to show you not only the teaching of what I'm talking about, but some examples of how I do it. Okay? Yeah, it's the worst place in the world to be, Cliff. You're right. And yet, give me a number one. I just want to take a survey for myself because sometimes maybe I'm losing touch. Give me a number one if you have been told or you have read or you got the impression that if you're new, you should start out swing trading, meaning using daily charts to get your entries and exits. Give me a one if you've heard that, been taught that, seen that, have that impression. Because my impression is everybody thinks that. I can't tell you how many emails I get saying, well, Paul, I'm just learning this, and I start out swing trading because that's certainly the easiest place to start, and I'm having a hard time. Well, yeah, of course you are, because it's the most difficult place to be. As a matter of fact, I don't even swing. That's the one time frame I don't do. I don't swing trade. I will sometimes do a little hit and run off the hourly chart overnight hold, and then I like to go out to the big time frame and not have to worry about it, and then I like to day trade. But the swing trading time frame to me, and especially guys, if you're available during the day, swing trading from the daily chart is almost, I don't want to say the word, it's not a good idea. Now, some of you I know you don't have a choice because you're working, and as a training tool, it's good, but be careful because it's very hard. It is the hardest time frame to learn. But we're going to get to that in just a minute. Let's talk about going for the home run. Well, yeah, Paul, but I mean, if you're available during the day, a 15-minute chart, that's my favorite chart. You don't need quick reactions. You have 15 minutes to make a decision on average, right? You have all the time in the world to make a decision. You don't need an overnight time frame. But again, for some people, it's what you have to do because you're available. Your availability is such. But we'll talk about that in just a minute. Going for the home run. Babe Ruth. Some great records for Babe Ruth. More than 40 homers in 11 seasons. I believe that is still a record today. Correct me if I'm wrong, if somebody really knows baseball. 60 homers in a season he had, that was a record for a while. 714 career homers, that was a record for a while. Led the league 12 times in homers. Nice job, Babe Ruth. You know what else he had? Anybody else would know what other record he holds? Yep, led the league in AL in strikeouts 5 times. I think that's still a record. And he had 1330 career strikeouts. That has been far surpassed because people have had longer careers and have struck out a lot more. Sammy Sosa and a bunch of other people. But he was a big strikeout king. Big strikeout king. Now, Babe Ruth still a great player, right? Because the thing is, in baseball, when you hit it over the fence, it's a home run. You get to clear the bases, right? I've never seen anybody hit over the fence and then trip on first base and go to the dugout with a single, right? But isn't that what traders do a lot? Can you relate to what I'm saying? Excuse me. You go for the home run, which has its share of strikeouts to get the home run, right? And then when you get the home run, you just kind of round first base and go into the dugout. Can you guys relate to what I'm saying when I say that, or do I have to explain it? Okay, good. So there's 2 answers to that question. So there's 2 answers to the question. Number one, either take your strikeouts, but when you hit the home run, round the bases. See, in baseball, it's a given. You get to walk around the bases. Or number 2, don't go for the home run. Be a contact hitter. You have to do one or the other. And be honest with you, folks, I don't care what you do. See, a lot of what I'm doing here in these events, obviously, it's not the goal to teach you the 3 days of seminar material. Obviously not my goal, and nor would we have time even if it was my goal. But I want to teach you some really good stuff, and I also want to open your eyes to a lot of other things to get you pointed down the right path, and this is one of them, right? Well, yeah, Paul, it's funny. I mean, Paul's saying sometimes they bite you if you hold them too long, but it's always the case, Paul, at least this is what it seems to every trader, and I can even say to myself a lot, it seems the same way, that if you hold it for 30 cents, it goes $3. And when you hold it for $3, it goes 30 cents and turns around, right? So you're never on the right side of it, it seems like. But you need to define what you're doing. And the problem with most people is, listen carefully, is that they're doing the worst half of both. In other words, they're going for the home run, so they're getting all the strikeouts. And then when they get the home run, then they decide they only want the single because they're chicken. And if you do that, you're guaranteed to lose money. A lot of people set themselves up in a way that they are guaranteed to lose money. Guaranteed. Because of the way they're trading. Right, Cliff, that's a great analogy. Yeah. And that's actually, my style. I like the get the singles, and then when you have a few singles built up, go for the homer. Go for the homer when it doesn't hurt you to have a strikeout. So what do I mean by that? Well, here's a theoretical example. First of all, guys, let me ask you, what is the market doing most of the time? Is it trending strong? Give me a T. Or is it sideways and sloppy? Sideways, give me an S. What is it doing most of the time? Right, most of the time it's sideways and sloppy, right? It's what I like to call return to the means. The average thing, if you go a little too high, it comes back down. If you go a little too low, it comes back up. That's what I call return to the means. Now, sometimes it's not. You have to know the difference. But think about this for yourself. I can't tell you what you're doing. Yeah, mean reversion, right? If you are always playing the home run, the big breakout, you're fighting the odds right there. Right? Yeah, but there's a downside to that too, Paul, as you know, right? I mean, if you start setting your sights to constantly make small profits and constantly limit your losses, you end up break even a lot. That's where you have to try and burst through that bubble to know when to hold, when to not to hold. But does that make sense? What I'm saying to you guys, that if you are always thinking that you have the breakout that's going to take you to infinity, most of the time you're going to be wrong, just statistically, right? Now, don't get me wrong. I like a good breakout play. But 95% of the time, doing it this way is going to be difficult to do. When you enter here, I just want to talk a minute about some of the problems that some of you may be having, because when you enter here, it sets up a whole host of problems. Number one, if you enter here, breaking above the top of a consolidation, where does your stop have to be? Where does your stop have to be? At your entry? You get in at 32.01 and your stop's at 32.01? Yeah, your stop's going to be below the base, right? Yeah, I mean, well, you mean general below, yes. But how far below? It's going to be down here at the bottom, right? So you have this wider stop area, and that means just to make one risk unit, in other words, to make one reward to risk, if you're risking $500 to make $500, you have to go that distance up to here, right? Speaking of negative charts, would you agree if you have thoughts on recent bullishness since you mentioned having started? Yeah, Gordon, could you ask that at the very end? I'm going to leave that for a question we can talk about as extra credit after 6 o'clock, because I would like to stay on topic and let everybody get what they came here for, at least initially, and then we can hang around and talk about that. So, do you see what I'm saying? So you need to get to here. Just so, what happens when you start this and then this happens? What's your thought process? Well, your thought process is, gee, I didn't come close to making money. I'm back to break even. And what do you immediately start thinking when this is your position? You get in here, your stop's here, you get the initial pop, and then you start seeing some selling. And by the way, this will happen 90% of the time. But what's your thought process, everybody? Put yourself in the moment. What's your thought process? Kurt, exactly, right? Shoot, I was up a little bit of money. Wasn't anywhere near a target, but I was up a little bit of money, and now I'm almost going negative, right? Yeah. Oh, you know what? OS. Right. Well, Joe, that would be what you'd want to do if you weren't in it already. But if you're in it already, and all of a sudden you're coming back to zero, and now you're in this dilemma: do I hang on and start losing money, or do I take a little bit of profit and book out of here, or do I hope this play works out? Right. Now, what I consider to be insanity, just to put things in perspective for you, is to get in this play full knowing that it's a breakout, full knowing that your stop's down here, and then to reconsider what you're doing right here. If you're doing that, folks, you have so little confidence. Don't get mad at me. I'm just trying to help. But you have so little confidence and so little knowledge of what you're doing, you'll never, ever have the tenacity to make any money. Did that make sense, what I just said? If you went through all this trouble to find this play, you look for it, you find it, you decide you're going to take it, you take it over the top, you put your stop at the bottom, and then if it's a day trade, 6 minutes later you're questioning the whole veracity of the play when it did nothing wrong, you shouldn't be trading. You shouldn't be doing this, right? Well, whatever you want to call it, Gabriel, whatever terminology you want to apply it. And that's why I like what I say the language of charts is it's not relying on a lot of terminology. It's not relying on, I mean, we use it, of course, because we need to take, concepts and condense them down. But it's simply, a lot of it relies on this what I call this bull-bear battle that goes on all the time. But do I have anything in slide for slop? And remember, if you're in a sloppy market, which we usually are, and if you don't even know which type of base should be played as a breakout and which should be played to fail, a lot of times, guys, I'm shorting the breakouts at tops of bases to fail because I think they'll fail. So if you don't know the difference in all these, you don't have the confidence to really be doing this, right? That's true, Paul, because if you don't have confidence, you're just going to be constantly hopping out of things. So I want to show you an example of an alternate way to do this. And that is to say, rather than taking the breakout, I'm going to tell you what it is because even though I'm giving you the answer, you won't have the knowledge to execute the answer. I'm not sure that makes sense. But rather than taking the breakout, why don't you get in before the breakout? Why don't you get in at the bottom? And you're going to say, well, Paul, it didn't break out yet. Okay, well, what do you need to have in order to have the confidence to say, I know it's going to break out? Well, you have to have really good chart reading ability. And that's my point of all this, is that for you to have an edge over everybody, the whole world can get in here, right? And the whole world does sometimes, and the whole world decides to get out and cause you problems. But what if you were in down here, such that that little pop, instead of getting in, what are you doing? You're selling some. Then if you sell some, who gave me my correct answer up there? Kurt. If you sell some here, Kurt, do you care about this pullback? If you're in somewhere down here, you sell some here, and now you're pulling back, do you even care about this pullback? You could care less. You're like, who cares? I'm watching Dukes of Hazzard reruns. I could care less what's going on down here. But if you get in here, you're immediately going red, and now you don't know what to do, right? So is that just a fictitious thing? Am I just like looking at a PowerPoint slide and saying, gee, this is what you should do, guys, because that makes sense after the fact? Well, let's go all the way back to yesterday. Whoops. Let's go all the way back to yesterday and take a look at a trade. There's people here in the trading room with me, guys. Amrin short, right? Somebody here from the trading room? Yesterday morning, 10 o'clock, shorted Amrin, correct? You let them know if I'm telling any fibs here. So this is the daily chart of Amrin, right? And this is yesterday. I captured this today, so there's that's part of the daily chart on there. Just ignore that. All you need to see on the daily chart is a gap down. Now, it's not a great gap. It was okay, but it was good enough for me to put it on a chart and watch during the first 30 minutes of the day. So let's go now to this is the daily chart, and all you need to see here is just I had a bearish bias. So now we go to a 1 minute chart. Now that was good. That was not a good enough gap to get really aggressive with it early. But guess what happens? Boom, 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 boom. Does that look familiar to anybody? Look familiar? Good enough for me, right? So typical technical analysis 101, short the breakdown, right? So you get short right here, and your stop's over the top, right? Well, it drops. Now it starts to come back, and now you're all scared. It starts to come back. What do you do right here? When you're right here, I bet you all of you, except maybe 5, are going to put your stop to right there, correct? Let me draw an arrow. Correct, everybody? Agree? Once you're down here, because you went negative, right? You shorted. It comes back. You go negative. Thank God I'm green again. Oh, there's a little pivot. Put my stop there, and boom, you stop out. And you say, well, that's okay. I just lost a little bit. But you never really had a chance. You were never really, you know, you were never really in the trade. How about this? How about shorting right there? That's exactly what I did. 1795. Put my stop well above the base, just in case. Guess what? Down here, guess what I'm doing? What I just told you. And by the way, guys, this is yesterday. This isn't an example from, 1972, Hall of Fame chart. This is just, whenever I do these presentations, I just find the best I can from the last couple of days for examples of what I'm talking about. But they'll tell you in the room, I do this all the time. Now, you may say, well, Paul, you're shorting up here. You don't have confirmation that you're going lower. Well, I do. Why do I have that? You're never going to get this answer, but I'll let you try while I drink some more water. If I'm shorting way up here and I'm playing it to break below the base, by the way, this ended up going way lower. So you would have really kicked yourself for stopping out. And actually, this was the trade of the day. The back of that made 3 Rs. What gives me the confidence to say, yeah, it's going lower? You're not going to like the answer, but, well, yeah, my cockiness, my knowledge of charts. I'm saying, you know what? I know it's going lower, but that's not really the answer. You're right, tier 2 gap, blah, 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 blah. I have enough confidence to say I don't need to see it break down. It's up here, exactly. But here's the other part of it that's really, really important to understand, is that whether I know the chart well enough or not, knowing this entry is more important to me. Because you know what? Over time, even if I'm not very good at this, even if I'm not very good at this, even if I'm not very good at knowing the pattern or knowing where it's going or any of that, knowing a great entry will make you more money than not. Because when you get a great entry, it gives you so many options, and I don't mean stock options, I mean it gives you so many different options of what to do that it can't be beat. So even if you can find examples where, oh, Paul, you shorted it and you stopped out where I never would have got in, I don't care. Because in the long run, I'm going to smoke you doing this. Absolutely smoke you. But what do you need to really make this work? You need to really know the language of charts. You need to understand the patterns well enough that in any situation, whatever it is, this happens to be a tier 2, actually it's a tier 3 gap. It's not a tier 2 gap, it's a tier 3 gap, actually. It's a tier 3 gap. So I was really pushing it because my rules would state I really shouldn't even do this before 10 o'clock, but I love this pattern so much, it was the right time to do it, and it turned out to be right. And again, it was yesterday. It wasn't 4 years ago. So that's the first example of what I consider to be an example of not going for the home run per se, meaning I'm willing to get in here and do it up here. You may look at it as going for the home run. I look at it as not going for the home run. I'm not playing the big breakdown. I guess the way I should phrase it is I don't need the home run move to make money. Because when I get down to here, guess what? Where people are getting in, I'm up a whole risk unit, almost a whole risk unit. And when we're down here, instead of being up 1, I'm up 2. Instead of being up 2, I'm up 3. I'm that much ahead of the entire game anytime I'm making money. And then again, once you have that great entry, you have a lot of different things you can do with that great entry. You can use it to really make an incredibly high reward risk trade. You can make it an incredibly safe trade. You can do a combination of both. You can end up taking a reduced loss on it, even at what would normally be a full stop out. All kinds of things you can do with this stuff we talk about in class a lot. But it's, to me, again, this is a big part of trading. And you're going to see a slide later where I say, I'd rather have a great entry on a so-so play than a so-so entry on a great play. Why? Because just being in the trenches every day for years, that's what makes more money. The average person won't tell you that. The average person is going to tell you, look for perfect patterns. And that's one of the things I'm going to talk about in a minute. And again, I mean, in theory, I can't argue with that. I love the concept. But in reality, it's not where you make money. And again, I know for some of you, it sounds like I'm speaking the wrong language. But number 2, Thinking swing trading is easy. I knew I was going to run out of time here. I didn't even put any slides in for this. I just want to alert you to this. I'm going to do, and the other reason is I'm going to do a video to put on the free stuff page about two time frames that I think are very misleading to people, and that's swing trading and scalping. If you think swing trading, if you're swing trading and struggling, there's likely a reason. Using the daily chart for entry and exit has all the volatility of the overnight hold, but yet has a very, very difficult reward to risk situation. You likely stop out in the morning of the second day. For those of you who swing trade, if you already know that and you agree, type a 1 on the screen. If you don't know because you haven't looked, please check. And you don't have to email me the answer, but check for yourself and find out. Because you will find that half of your stop outs occur on the morning of day 2, and they probably weren't even necessary. But because of the way you're taught to do it, you probably are in, you're out the next day, and then and maybe the play worked, maybe it didn't. Yeah. Well, it typically is the first 30 minutes of day 2. See, I'm not talking, naturally, you may have plays that don't work. That's not my focus. I mean, even plays that work, put work in quotes, even plays that theoretically work, oftentimes stop out before they work on the morning of day 2, right? Well, it depends what you mean by safest. He's saying TJ, I'm sorry, shouldn't have said he. TJ is saying isn't day trading the safest. It depends what you mean by safest. See, on one hand, you could say there's no overnight risk, but let me give you an interesting statistic. Did you know that in the typical bull market move, including every bull market in the last 10 years, did you know that I think it's 70, and somebody correct me if it's 80, 70 or 80% of the entire move is made overnight? Were you aware of that? So why people talk about the overnight hold risk, is it 80%? Okay. Well, so why people talk about the overnight risk, well, it works both ways. That's where all the money is made also, and that's why I and most prudent people would advocate two trading styles where you have long-term positions. I happen to like core long-term positions, not overnight, but holding overnight, because that's where a lot of the gains come. So it depends what you mean by safest, TJ. I mean, yeah, by day trading, you never have to cough up more than what your risk is because you never have a gap go against you. But you also don't have a gap go for you, Yeah, isn't that eye-opening? Well, Gordon, that's exactly the reason, that you should be working from two accounts where you have some long-term stuff. Like right now, I've and again, in the long-term trader, I have two things long from 3 days ago, the Intel and a Square. And Intel came up a penny short of a target, and Square is doing okay. So, you don't get those a lot of times. Now, it happened, most of that move came today during the trading day, but that's kind of unusual. But a lot of you get from the overnight gaps, because as a day trader, you don't get any of that gap. So moving on, so swing trading. So again, longer term positions are a good thing, and the overnight hold is a good thing when done properly. It's just the swing trading, and for those who aren't familiar, I mean people who are taking their entries and exits from a daily chart and holding 2, 3, 4 days trying to get that quick move. Part of the problem is if there is ever a time that you have to have a perfect chart, it's the daily chart swing trading. Perfect trade. TJ, you and I would not get along then at lunch. As a day trader, I walk away from my position. I put stops on them, but I walk away from my positions. I make more money not sitting there than I do sitting there whenever I have a good position open. Naturally, if it has a choppy position, I could probably do better sitting there. But on balance, I make more money walking away than sitting there. I don't like to watch. There's less selection also. When you're swing trading, let's say you have a universe of 500 stocks. You have 500 charts to look at. That's it. You're done. Do you know how many out of 500 charts, do you know how many charts I would even consider looking at? It would be 5 times 3, 15. 15 charts is all I would have to look at. And out of those 15, the odds are I may only like one. The one that I like may not set up properly. The market may not agree. It may be earnings coming up. Who knows? I'm not sure. So that's another problem is that, and I'm comparing that to day trading, of course. Naturally, if you're longer term, you have even less charts to look at. But as a day trader, um, if you're trading a 5-minute chart, you have 5-minute charts to look at every 5 minutes of the day. They keep changing, keep reforming. Stocks you didn't like at one moment, you may like an hour later. Things keep re-happening. So there's more, and it's a catch-22 because that's also one of the downfalls of day trading is there's too much information available to you at all times. And that's all I wanted to mention. I just wanted to do an eye opener for you on that topic because I think it's a big one, and I keep getting the emails from people. I'm going to be more active soon, but I'm learning on swing trading, and here's my trades, and they didn't work, and what's wrong? And generally they weren't good setups, and a lot of things. But swing trading is a difficult time frame to learn. I do not like it myself at all. All right, let's go to the next big topic here. I have a couple charts to look at. Waiting for confirmation. And then I put too much. Of course, you need some kind of confirmation, right? Trading is about finding what I like to call first a picture of power. In other words, some reason that you want to be in the trade long or short. Something has happened, and that can come from 4 things. It can come from a superior higher time frame. It can come from a gap. It can come from extreme relative strength or weakness. But whatever you find to be the reason you want to be in the trade, of course, then it complements with the setup. And they need some kind of trigger, and that's what we call the confirmation. We something say, okay, I think this is going higher. And then what we do is we set up a little threshold, like a little, what do you call those track runners that jump over the, they jump over the, what do you call those things? Hurdlers, yeah. A hurdle. So we set up a hurdle. Senior moment again. So we set up a hurdle for the stock and say, okay, if the stock can clear that hurdle, and that's what the confirmation is. So we always want some confirmation. But answer this question first, everybody. The amount of confirmation you need is directly related to the chart pattern, your technical knowledge, both A and B or none of the above. So if you think the confirmation is an absolute constant that doesn't change, then you'd put D because none of the above. So do you think it's A, B, C, or D? The amount of in other words, before you get into a trade, how much, if you're going to go long, how much do you need to see it move up? How much do you need to see it move up before you decide, okay, it's moving up, I'm going to jump in now? Yeah, absolutely C, both A and B. Your technical knowledge is really the key thing, right? Your technical knowledge is the key thing. As a matter of fact, there's a pattern or there's an entry I teach where the knowledge is so critical that the actual confirmation is literally 0. It's literally, okay, I've arrived, I'm getting in, period. It's going the wrong direction, but I don't care because I know it's going to turn around right now. That's the ultimate in no confirmation. And then, of course, there's other times where, based on the chart, you want a lot more confirmation. You're saying, I'm not really sure I'm in the support area. I'm not sure I'm in the right spot in the uptrend. I'm not sure the market's turning yet. And you want to make sure that the stock is going to move before you get in. And that's why you need to have these different options available in your head and understand how to do them. The problem is, if you wait until everyone else gets in the trade to confirm your bias, guess what? That's what they call lemmings. If you look, see, that's what human nature is. Human nature is, I'm not going to be the first one through the door, right? I'm not going to stick my foot in there first. I may not be right. So human nature is to kind of follow the pack. Well, if you're following most of the people out there, guess what? You're never going to make it to your target. We need that group of people to come in after us. So we need to be smart enough to say, hey, now's the time. And then the relatively smart people come in, help take us to a target, and then the idiots come in and push us all the way to the target, and then it's over. Does that make sense? Yeah, well, there has to be a balance, obviously. You're right. You see, it's proportional to how well you know your chart pattern. If you don't know the chart pattern well, or and there's different types of plays. There's plays where people typically are early. When you're waiting for a pullback, people are typically too early. They're impatient. and you're better off waiting. But once you have the right area, and once you say, okay, everything's a go, then that's when you don't want to wait too long, because then you're just giving up profit. Remember, every penny you tick higher has a two-prong effect. It's 1 penny closer to your target you're not getting, and it's 1 penny further from your stop that you have to add to your stop, right? So it's like a double whammy. So I am probably the #1 person with the belief that the entry is everything. The entry is everything to me. You know, let me draw something for you, because this happened to me. Well, I always use the example a while back. It happened to me again about 3 weeks ago. But let me just draw this for you real quick. I had a stock that dropped to a support area. Boom, there it is. Okay, and I thought this is, you know, really like going to be a big mover. Like, it was really off the daily chart, so I thought it's going to go up to here somewhere. You follow? The problem was I didn't see it here. That's where I'd get in normally. I saw it up here. And I never normally get in there. But you know what I did? I said, you know what? Boom, boom, look at my target. I'm going in late. Okay? You follow? So I got in late. I got in up there. Well, guess what happened? It popped a little bit, and it popped to right there. But it wasn't enough to take any target. You know, even a cheap target would have been here somewhere. So it popped and it rolls over. Right? And it rolls down to there. Guess what? Guess what? We just had this question a minute ago, right? I'm caught in the middle. I call this being caught in the middle, right? I don't have a target. My late entry I felt was justified because I had a big target in mind, but guess where I am? I'm sitting here down a half of a risk unit. Everybody follow what I'm drawing here? Yeah, well, keep in mind, Rick, I'm explaining this as a model stupid trade I did. I put this as a model to never do. Because you can justify it by saying it's still a justified trade, but here's the problem. It's not a matter of getting from point A to point B. At the end of the day, you can look at it and say, yep, it got to point B. You know what has to happen? You have to be with the trade, right? You have to stay with it. And guess what happened, guys? It bounced a little bit. I raised my stop. It came down and went a nickel under my stop. And guess what it did? It went all the way to this target. I took a 0.6 loss on something that was a 3.5 R gain, right? But here's what I want to explain to you. What if the same chart, what if I had the right entry? It's getting a little sloppy drawing. So what if I just draw here? What if I got in here where I was supposed to? Right here, right? Guess what? That's a target. I take a third off the table. Now, where's my guy, Kurt? What happens now in this pullback curve when I've already sold a third? And I got in down here. I'm not even red yet. Who cares? Who cares? I'm not sitting here finessing this. I try not to do that. I make, you know, if I were to hold myself out as an example as somebody that doesn't overmanage something, but every once in a while you get whacked. So this literally was a case because of the entry of a 3.5 R win turning into a 0.6 loss. Well, it wouldn't have been 3.5. It would have taken, I mean, that was the ultimate target, but you know, it would have been about 2.2 or something, I think it was. And my question to you is, how often does some variation of this happen to you? How often does some variation happen to you? I teach 2 entries in my classes, and they're not the entries you think they are. I haven't used the high of a bar in 18 years. What would get you to take it early, though? Well, Kurt, the right setup. I mean, I can't, in all fairness, even go into answering that question because that's a multiple hour answer. Do you know what I mean? That is what you need to learn, right? I mean, I'm not trying to be some jerk, you know, saying, oh, that's the highfalutin stuff you have to learn. No, don't be sorry. I'm sorry. I'm just saying realistically, I can't give that answer justice because that is what it is you have to learn. That is the tough part of technical analysis is when does everything come together? That, Kurt, it's the language of charts. When does everything come together where you would say, that's my entry instead of that? And that's the balancing act you have to learn. Yeah. Yeah, MM, I don't want to go into it, but I don't agree with that really. Yeah, today, I mean, things took off today because of a news announcement, but I I don't buy into the whole news thing hard. I mean, it's what it always is. We have to deal with it as traders. There's no excuses. I don't want to get into it, but I don't go for the whole news thing. It's of course markets react to news, but they react in a way that's consistent with the chart pattern. Good news is good news when the bulls are in charge. Bad news is okay news when the bulls are in charge. When the bears are in charge, good news is bad news and bad news is terrible news. You know what I mean? Go back to October 2nd. When I went short on the market, there was all good news out. After the market fell, then it was blamed on bad news. It had nothing to do with bad news. Today could have been reacted to very differently if the market was not in bullish mode already. I was already long 2 core positions 2 days ago. Not because of the news today. The news was reacted to in that way because of the market environment. I'm not sure if that makes sense to all you, but that's one of the most absolute things I can tell you out there that there is. So you have to be a little smarter than everyone else, at least on that one play, so that all other people can get your target. All right. Man, I knew I was going to run behind. Waiting for confirmation. An example. Again, this was yesterday, not 1968, not the dodgeball tournament in 1968. This is yesterday. So this is T. This is a daily chart. Now, the daily chart is not terribly valuable here. This is mostly from an hourly chart that I found, but I just want to show you the daily chart. I'm looking at the end of this trading day for the next day. So when I looked at this chart, I had the green bar in the daily chart over the red bar. All I'm showing you here is that it negated a red bar at a higher low. So there's no big deal on the daily chart. That's not really a big part of the play, okay? But here is it's the hourly chart. Every morning I scan. I can't even comment. Every morning I scan, and I go through a whole bunch of daily charts and a whole bunch of hourly charts, and I pulled T off the hourly chart list. And I'm showing the 15-minute chart just because it's a little clearer. But the hourly chart here was the one that I pulled out. Now, I pulled it out to play this, but then when I go to look at it that morning, the stock gapped to here. So this is T. This is the end of the day. I pulled this out because I like this. I'm thinking, okay, over this base, boom, great, good to go. It's gapping to here. So what's the play? What do we do? I have this chart that looks really bullish, and we're gapping below the whole base, below the pivot, below everything. What do we do? What do we do? Anybody have an idea? Do you go short? Do you go long? Do you wait for it to clear the base to go long? I showed you the daily chart. I'm showing you the 15-minute chart. Interesting. We have all different answers. And naturally, you're seeing 2 charts. Well, that's all you really needed. I pulled it out as a bullish chart, though. So we open there, and the answer is to go long. I went long under the base. Now, what's the section here? Waiting for confirmation. Not to wait for too much. I know this play. I know it like the back of my hand. This happens all the time. It's a bullish day, a bullish market. It's a bullish pattern that's set up. It had reversed on the daily. The hourly chart had already transitioned. This is a very bullish wide range bar. Things happen the first 5 minutes. And once this thing put in the tail and started heading up, I was in down there. I was in at 29.96. Now, I know to some of you that doesn't make any sense. Right, Gabriel. Yeah. And again, however you look at this is what happens all the time on this play. If you know the setup, if you know what I'm talking about, if you understand exactly the setup, this happens a lot. So much so that I'm willing to go along there. Now, look at the difference. You wait for the breakout above the base, guess what? It still makes money because this thing had a huge move, but naturally, you're making way more money. You're making money on the breakout rather than just playing it on the breakout. So the title of this section is just understanding your plays so well that you know how much confirmation is needed, what you need to get in so that you can get the best entries. Because if you get in improperly, it costs you a stop out. But how much money do you lose waiting too much all the time because it takes away from your profit on every single winning trade? Did that make sense at all? kept referring back to the title of the section so. Makes sense. All right. I'm about 5 minutes behind. My apologies. I always like to finish at 6. We're going to be about 6:10. And I left so much out of this. I had so much stuff I wanted to do in here. Yeah, Gabriel, there's a small secondary sign on a 1-minute chart. Yeah. It wasn't a typical entry, you'd probably say, but I was like, I just needed some little thing to say, okay, it's not going to fall under the base. And once I saw that, if you look at a 1-minute chart, you'll see it, Gabriel, if you know what you're looking for. Mistake number 4, looking for perfection. I don't want to go into this. I'm just going to restate this. There's actually an event I did called, I don't know the name of it. It'll be on a slide in a minute, but you can go back and look if you want to. But I just want to bring this up because I think I'm actually putting this as one of the mistakes I think people make because, again, the typical thing when you hear somebody talk is, look for perfect plays. Well, I have a problem with that because you know what? When you're in the trenches really doing this, that's not really good advice because it's worthless advice. Well, what does that mean? Think about it. What does that mean, look for perfect plays? Couldn't 2 great traders disagree about what a perfect pattern is? Yes or no? Could 2 great traders, 2 really great traders, I mean, I'm not being facetious, couldn't really 2 good people disagree? Yeah, absolutely. It's very subjective. I gave the example before. It's really not much different than looking for your spouse to say, there's a perfect, man-woman for, there's the perfect man-woman. Short brunette hair, buck teeth and braces. That's a perfect person for me. Well, maybe not for me. I mean, what is perfect? There's quite a wide variety of what's perfect. And what if the perfect pattern doesn't occur often enough? What if the perfect TJ at the end? Give me those questions at the end where we can finish what we're doing. I'll gladly answer them for you. But let's go through what we're doing here. What if the perfect pattern doesn't happen enough? What do you do then, everybody? You need to make X number of dollars a day if you're day trading, and you don't see your perfect pattern for 3 days. What do you do? What does anybody do? What does anyone do? I would never eat food off the floor, but if I didn't have food for 4 days, guess what? I'd probably eat food off the floor or out of a garbage can, right? You compromise. You go with the best thing that you can. So think about this. Doesn't it make more sense to learn to deal with what we really see every day rather than hold out to the philosophical perfect pattern, which is really undefined anyhow? I said that. I'm going to try to say it again. I thought that was a really good comment. Doesn't it make sense to learn to deal with what we have to deal with every day rather than have to try to hold out for a perfect pattern that is only a philosophical concept anyhow? I repeated it. That was pretty good. Good comment? Because it's what really matters. I see people trying to learn perfection and it's not out there, number one. And number two is, okay, fine, you're looking for perfection, but here's what you got to deal with. Here's 6 patterns that are less than perfect, but you know what? They can make a lot of money. You need to learn how to make money from those B-rated patterns because that's what you see. And again, to me, what's way more important is if you use a great entry and great management on a B-rated pattern, you're going to blow away anybody waiting for the A-rated pattern that doesn't know how to enter or manage properly. Can you all agree with that one as well? I'm sure everyone will agree with that because you all probably have been subject to the difficulties of entering and managing trades. You find trades that work at the end of the day, they get where you want them to go, but then you turn around and say, well, okay, I wasn't in it because I never got in, because it went too fast, because I waited too long. I got in, but I got out with 10 cents profit and it went $4, right? So, hence the word I have here, I would rather have a great entry in management on a so-so setup than have a bad entry in management and a great setup. Think about it. All right, last real slide. All the stuff I'm talking about, something I want to add, the language of charts. Is this hard to learn? Well, let me ask you this. I've used this example before, so forgive me if you've heard it, but if you're listening to me, are you smarter than a 5th grader? Don't read the slide. Just are you smarter than a 5th grader? Just the average 5th grader. I'm not going to pull some genius out of my back pocket. Are you smarter than the average 5th grader? I would say that all of you are. Not any longer. All right, so how about if I put you in a spelling bee against a fifth grader? Would you win? What if that spelling bee was in Spanish? The fifth grader was a native-born Spaniard, and you didn't know a lick of Spanish. Guess what? You would not win the spelling bee. Does that mean that the fifth grader is smarter than you? See, I think that, to me, that is the perfect analogy. Understanding charts is a language of its own. It does not require great intelligence. It really, the skills needed, the technical understanding, is not more than what you need in fifth grade school. Does everybody agree with that? Yes, does everybody agree with that? Because it's an important revelation for you to understand. I mean, nobody has asked you to take derivations of calculus. Nobody's asked you to find the equation of a parabolic curve. None of that is involved. None of it. It's pictures and third grade arithmetic. That's all it is. But I'm not, understand, I'm not saying it's easy, but it's just like learning a language. It's just like if you don't know Spanish, I don't care how easy the question is, you don't know the answer. And it's the same thing. There's a huge amount of detail that needs to be learned. It needs to be learned. It needs to be memorized, number one. But memorizing is not good enough. Why is memorizing not good enough? Memorizing is not good enough because you have to also understand it, right? You can memorize something and not understand it. You can memorize the formula to DNA. Doesn't mean you understand one lick of DNA, right? And even understanding it is not good enough because then you have to apply it. And something I'm really big on in my teaching is that, fine, we're here in class, that's great. You've learned it, you've memorized it, and you understand it. But now let me show you how these last 10 trades I did are exactly what I taught you on the chart. That's what the important link is that's missing for a lot of people. There's so many people that take trades, and it's like, okay, nobody taught you this. This is terrible. What are you doing? And either I know what they were taught or they show me what they're taught. I'm like, okay, here's what you're taught. That's nice. Here's what you're doing. There's no correlation or whatsoever. So applying what you learn is the next critical thing. And again, I'm trying to help for those of you that are not there yet, that are break even or struggling. This is the process everybody has to go through. It is the greatest thing in the world once you get it. There's nothing greater than trading. How much more fun can there be? There's no overhead, no employees, no anything. Just go out and hit buttons and make money. And naturally, it's not always that simple, but on balance, when you know what you're doing, it's what you do. And there's nothing greater, but you have to learn it. I included one slide in here from last week because typically when I do these presentations, I take the prior presentation, I just, delete and change slides. And I like this one here so much I left it because I forgot I even had it. Sloppiness. Not understanding how far prices can run, not knowing exactly where to enter, not knowing where the market's likely to bounce or stall, not knowing confirming type of entries. Just not being a good chart reader means you lose something. And you know what? In the market, you can't lose anything. If you know what you're doing, you have the odds in the market, but they're not huge odds. You can't give back little chunks of things and still expect to make money. You have to get it all right to keep the odds in your favor. All right? For those of you who enjoy learning and are not ready to do anything more, hopefully you're aware of what I have as a free stuff page on the website. You go to the DTS, the disciplinedtradingstrategies.com, click on free stuff, and there you will find a plethora of information that is increasing all the time. There are play of the week videos. There are all of these presentations, including the ones I was talking about. The one I was talking about that had that discussion about perfect patterns is something about three, I can't read it on that screen, but something about 3 things about technical analysis. It has number 3 in it. You'll find it. And other information is on that site, and I'm adding more educational videos all the time, and there'll be some more coming out very soon as well. So take a run through that. Remember, tomorrow you'll get an invite. But don't get excited. Tomorrow is not educational. It's a question and answer about the DTS services. Those are the paid for services, so don't show up unless you know, are bored or whatever. So they're just really for people who want to ask questions because some people, even though I think it's incredibly organized and understandable, some people are confused. So take a look, and then remember the next free event is going to be the Introduction to Mastering Technical Analysis. Okay. So with that, some of you have some. We're officially done. It's 6:14. I'm sorry I kept you 14 minutes extra. I hope nobody's late for dinner or getting yelled at by their spouse or whatever. But Marinus, it is. That's at 7. That's for graduate students. Yeah, that's for people in summer program. It's at 7 o'clock at night. Yeah, this is 5 o'clock for anybody who wants to show up. Yeah, no problem. I'm glad you asked. And you already have your invite to the graduate stuff. You already have that invite. I'll probably send a reminder out tomorrow. Yeah. So now, some of you had other questions that I asked you to throw out here now. Please feel free to do that now. I'll hang around for, you know, whatever it takes. 1, 2, 3 minutes. No, whatever it takes. Tony, why 2 times above, not 1? Oh, for looking at multiple time frames? Because, well, Tony, you should know that that's the thing we talk about in class. Because the time frame above must be complementary / confirming, and the 1, 2 time frames above must not be conflicting. Must not be conflicting. In other words, to keep it simple, an hourly chart uptrend is perfectly fine, even in a weekly downtrend, unless the weekly downtrend is coming right into the sell setup area or major resistance, right? September 7th, Don, it's right on the screen. Oh, it's December. September 7th is called I'm an Idiot, and I actually changed it because it was a different month, and I wrote September instead of December. That's December 7th. If you were here on time, I had the slide up earlier today, and you would have seen that. So obviously you were late. December 7th. That's a nice December. It's the best I can do. So that's, you know, like in a week or whatever. Okay. What type of orders do I enter on? Well, if you want a whole discussion of orders, I do that this Friday, the 7th. But I will almost always finger on the button just with a limit order that has a very wide limit. But it depends a lot also on how tradable the stock is, how much of a limit I give it. And for that, there's also a nice discussion, a free video on the site called The Tradability of Stocks and Slippage that give you more discussions on how I do that, TJ. Overkill, you asked a simple question. I gave you 3 videos you can refer to, but generally always, you know, limit orders with a wide limit, generally speaking. Tony, you remembered, good. Marinus, so how do I know? Marinus, if at the end of the day, at the end of the week, at the end of the month, if you go back and you do an all or nothing analysis of your trades and you're making money, then you're a good chart reader. If you're losing money, then you're a bad manager. If you're making money, then you're a good chart reader and a good manager. A lot of people are good chart readers. In other words, at the end of the day, the end of the week, end of the month, they find that their stocks did really well, but they don't make money because they manage poorly. So that's the distinction you have to find out. And you do that by the all or nothing analysis, which you have heard many times from me because you're in class. Steve, follow the market accelerated due to the Fed shares comments day. If they continue the rest of the day and then settle near resistance, do you see continued resistance? Steve, I am nothing to do with today. Could care less what the Fed chair says. That has nothing to do with anything in the world. The market has already understood and built all that into it a long time ago. This reaction certainly was a reaction, but it was, you know, Steve, just to prove this, it is in writing. Somebody who gets the letter, it is in writing. I said sometime in the last 2 or 3 days that I am now bullish on the daily charts, and one of these days the market's going to put in a big green bar. Tony, you're here. True or false? Is that in writing from me in the last 3 days? The market will put in a big green bar. Thank you. The market will put in a big green bar. It's in writing in a letter I write, Steve. Okay, true, another true. Okay? So, again, it's not, I know this is so hard to understand, but it's not really the Fed chair comments. The Fed chair comments was the excuse that gave the market the release it wanted to rally, because it was time to rally. People were already buying the market. People stopped selling the market. Now we need the excuse. It could have been anything. And sure, it were nice comments. But you know what, Steve? It is true that those same comments have also been taken negatively at other times in the market. It just depends. But anyways, I've been bullish on the market. I mean, big picture, I've always been bullish. The intermediate time frame, I was bearish. I switched to bullish 3-4 days ago. It's still going to stay bullish until proven wrong. It will be a sloppy, difficult pattern. And I actually am core long from 3 days ago, 2 stocks. So Don, I think that answers your question. Marinus, Joe, Gordon, speaking of the language of charts, would be curious if you have thoughts about recent bullishness you mentioned having just started. Yeah, Joe, did I just answer your question? I think I just answered. I answered 3 questions at once without even realizing it. So, big picture. The monthly charts. Are we having a 2008 type of question? I've always been bullish and never went bearish. The intermediate time frame, the multiple days, couple of weeks that went bearish, that's back to bullish 3-4 days ago. It continues to be bearish, bullish, regardless of the daily chart because of the weekly chart. So the daily chart is going to have its bumps and pitfalls. The daily chart is going to have its, moments. It's going to be a more difficult trip up, but stay with it until proven wrong. However, what I have said and what I still continue to say, however, is that we may not see new highs. What I have, Joe, Steve, what I have said and will continue to say is that we're going to be in a sideways weekly chart for a while. Where that top will come is going to be hard to say. I can't predict that exact number, but we will come in short of the all-time highs before we have a hard rollover. And just where that happens will help determine just what the future might be for new highs and that kind of stuff. All right? Other questions? I'm giving you guys. I see a couple people typing, and I know there were some other questions. Do you send it? Yeah, Carl, I have a daily market letter that is really aimed at mostly at day traders. It does have swing watch lists, but not swing plays, and it gives a complete market commentary from intraday all the way out to the big picture. And that comes out every morning at 8 o'clock. It's a subscription thing, yeah. It is a subscription thing. And there's also a long-term trader letter that it comes out as needed simply for the purpose of long-term plays. And usually it comes out a couple times a month or as needed. And one of those is just out 3 days ago. Other questions, anybody? If you have any questions, email me, Carlo. If we have no other questions, great. All right. Thanks, everybody. Oh, no problem, Gabriel. No problem. I said I enjoy doing it. I'm at a point now, this perfect spot in my life where I am having fun doing this and trying to help people learn this. I will see you guys tomorrow night if you're coming to that. Again, that's not educational though. And then hopefully a lot of you be there for that Friday for the half-day class. Okay. Thanks, guys. Have a good one.